ton to cover. We have markets. All right, we've got bonds, we got JPY, we have some earnings coming out. We have the VIX. Is it going to go into the 14s? We've got this $500 billion financing deal. We've got a preview CPI. We're in Hormuz hell. Intel upping their stock offering. There is so much news and so much actionable opportunity that I can't wait to dig in. So, Amin, we better roll those credits. Good morning. I am Mark Sebastian. I am your only option. I am the founder and CEO of OptionPit.com. We're going to have Tim Colby on here in just a few minutes. But before that, let's break down what's going on in the market. As we open the day, we're relatively flat. A couple of back-to-back inside days so far. Inside day is a trader term for a day where we're not doing very much. And to start the day, you got the S&P up about 9. Dow up about 80 and the NASDAQ up about 50. The Russell is leading the way. It is up 17 points, good for a little over 0.5%. And RSP also leading the other ETFs besides the RUT up about 0.3%. The market is waiting. CPI, and we got some big earnings this week. Service, CoreWeave, Applied Materials is probably the biggie. But we do have a couple earnings that that have already happened on the space front that we're gonna look at here in just a minute. But yeah, you can see SPX just kind of hanging on the range, pretty much unchanged. Looking at the bond market, the 10-year yield. All right. I got to spell yield right, folks. I need 1 minute of this. I need the daily. Thank you. The 10-year was over 4.7 overnight. It's hanging right around 4.684. Again, the move higher in yields continues to persist. And the 30-year is not much better. Hanging out right at 5.25, 5.235. Was over 5.25 last night. You can see we continue to see, yields starting to scream a little bit. We're not there yet, but we're approaching some levels where markets are going to start to get really worried. And unlike yesterday when we had kind of a pretty decent sized sell-off in the yen pretty flat today. So taking a pause. If the yen's not going down, that is not going to be as much of a problem for markets. VIX itself coming in 1546 flat on the day. The VIX future hanging around 17. This spread is really wide. So remember, options on VIX trade in VIX futures, not on the cash, but they have to settle into the cash. So when I look at options on VIX, we're trading 1545. The 15.5 calls for 15 cents. The 16 calls for 30. Both look like really interesting values. And some areas where I can probably make some money. Heck, the 17s for 85 are really inexpensive. I see some real opportunity in VIX. A trade I really like is long strangle out to August expiration and then hedged with VIX puts. I think there's going to be some real opportunity to make some money on that. It's a little bit more of a complex trade. But what I'm trying to tell you is that the forward volatility that VIX options trade off of relative to how much it actually costs to just buy options in S&P is a little off. And S&P options are probably a little too inexpensive, especially heading into CPI and PPI tomorrow. A couple interesting earnings. Rocket Lab and AST SpaceMobile came out last night. Rocket Lab down a touch. This was one that was on our intercept list, but earnings, I'm not going to be trading this. ASTS, both of these kind of a non-event event for an earnings. We do still have some other big earnings coming up tonight, tomorrow, notably tomorrow and Thursday that I am tracking. And that's kind of your breakdown of the market. I'm going to preview CPI toward the end because by the time we meet tomorrow, CPI will already be out and we'll be trading it. So I want to look at how expensive those options are. But you heard at the top of the show me alluding to this credit facility. NVIDIA is creating a $500 billion financing program for chips, arguing that chips are an investment. The debt on chips is an investment. Chips are a rapidly depreciating piece of hardware. Maybe that slowed down a little bit. Used car prices do fluctuate, but in general, used car prices do drop. And GPUs are the same way. But, with this group, Apollo Global Management, Blackstone, BlackRock, BAM, Brookfield Asset Management, Goldman, KKR. I'm frankly surprised we don't see Morgan Stanley and some of the other names in there. And they're trying to pull third-party capital to hyperscalers and Frontier AI Labs to build data centers and acquire NVIDIA hardware. Basically, NVIDIA set up a financing arm for their chips. In a best-case scenario, it's GMAC. How many of us are old enough to remember GMAC? General Motors. That was their auto financing arm. And, the sale of GMAC was what kind of ended up, which is now Ally Bank, believe it or not. That was one of the nails in the coffin of old GM. So this, to me, smells of either a generational profit opportunity or they're monetizing their risk. The hyperscalers, KKR, they're monetizing their risk out to private credit, out to private equity, and out to individuals and family offices so they can own this. I'm interested to see how this thing goes. But it smells to me. And in another piece of news, this came out this morning, Intel had announced they were selling their stock at $95 a share. There was so much demand, they actually raised their offer price, raised their offering dollar amount. They're now selling $20 billion for CPUs and their foundry and all the other things they're doing. Again, smart move by Intel, selling stock when the stock is at an all-time high. The CFO of Intel is David Zinsner. David Zinsner has now been added to our CFO Hall of Fame along with Google's CFO which is, let's see, Anat Ashkenazi. We're a big fan of you, Anat. But yeah, this stuff smells. Now I had a really nice talk about this with our guest, and he's got some thoughts as well. We're also going to talk about oil and what's going on in the Strait. Let's bring in our good friend and head of macro trading, the man who made the gold call of the year just 1 week ago today. He is Tim Colby. Good morning, Tim.
Here, there we are.
Yeah, there we are. Good morning, Tim.
Hey, how you doing, Mark?
So nice work on gold last week. Folks that were here last Tuesday, Tim said it's time to buy gold. And then he went into special situations, put out a trade, and everybody in that group made some money. And hopefully, if you were listening, you jumped on gold or some of the miners as well and profited. I know I did. I made in 5 days. I made just under. I put $6,000 in one of my accounts. I put $6,000 into the trade and came back with an additional $6,800, almost $6,900. Nice 115%
return. Attaboy, there you go.
When you got an idea, I'm going to trade it. You know, that's one of the things we do here. When we see our other traders trading something with, and it's a great idea, we're like, yeah, I'm on board with that. So Tim, nice work. I think everybody here owes you a little bit of thank you that got into that GLD trade. Now let's talk about NVIDIA.
Yeah.
And this credit financing and the $500 billion and the fact that it is every Wall Street juggernaut playing in this pool.
So a couple of things. Look at Blackstone today. Look at KKR. Look at APO. Sorry. So far, macro man. Sorry, a little announcement at the desk here. Those stocks are on fire. Like, of all the things, like that is this is right up their wheelhouse. Look, this is the biggest news that nothing happened, right? So nothing actually happened. They just announced a credit facility. Nobody took any money yet, but this is one of those pieces of the story, of the big story of the AI build out. This is like all of a sudden a new character just came into the into the storyline, and it's very fascinating. What's really interesting, again, I think Blue Dog put it in there, and he took the words right out of my mouth. They are backstopping 25% of the residual value of these GPUs. And so it's kind of like a little bit about the debate about how this used car or this used GPU market, how are they going to decay? And Jensen thinks that they're going to last longer than anybody else thinks. And he said, look, we'll back them up. And so basically, Jensen just sold puts on his own product.
Yeah.
He sold puts on his product. He said, look, they're going to hold their value. I think they're going to hold their value. We're going to backstop some of this. And the idea is the market needs money to fund this build out. And this is a different way to do it. And when you do it in the private markets, these are pension funds. They don't hit the bid when they're scared. They buy the dip. It's very different from Leo, how Leo was playing this whole build out. Leo was in there levered 4x, and Blackstone, the pension funds, they don't 4x. They get in there and they get in with a 10% allocation. And then when it goes against them, they add another bit. And so there's kind of a big, it's a game. Like I heard you and Garrett talking about the fact that this is smelling a little bit. This is a little bit 080, 07. I agree. Like this is starting to have, like, again, the characters of the story that you can find allegory here, but the idea that there is just huge amounts of demand for this build out, that you got to find new ways to finance it. This is a new way that we haven't seen before.
It's GMAC. This is NVIDIA starting at GMAC with the backing of KKR and Apollo and Goldman. I mean, how is this any different than setting up a financing arm that is a subsidiary, wholly owned subsidiary, but you can lay off that risk if you need to in General Motors Automotive Credit to GM actually producing the cars and selling to individuals and used cars? How is it any different?
It's not, and and that's kind of why Michael Burry put out. He showed up the chart of the credit default swaps on uh, Nvidia. The credit default
Mm-hmm.
swap. I mean, they didn't even have credit. Like they were net cash rich, for a while. Now we're talking
Yeah.
about this whole free cash flow problem. Whatever changeover. But look, the credit default swaps, yes, they doubled, right? But that's like a 3 delta put 5 years out, went from 3 deltas to 6 deltas. Like the stock didn't move and the vol basically exploded, but it didn't.
Yeah.
It didn't go to 50 delta. Like these CDSs aren't trading at 500; they're trading at 77, and that's equivalent to like a 3 to 5 delta option. So,
And for
and the
those of you
reason
that
that
don't
those
know what
went
a
up,
3 delta option means, that means it is highly, 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 highly unlikely to go in the money. So it is
well,
a
three
way out of the
percent,
money
right?
put. Yeah, it
Yeah,
is a
3%
way
chance,
out of the
right?
money put. Yeah,
Yeah.
yeah, give or take.
And by way out of the money, I mean it's literally like Nvidia goes to zero out of the money, right? Like a
Yeah,
Nvidia default on their credit. Like it's a very small chance. The point is, it's the market needs to hedge somehow of what's coming out of here, and that's one way to do it. You can't short. You can't buy protection on OpenAI. You can't buy protection on Anthropic. Like those are the people actually with the risk, right? So you have
mhm,
OpenAI worth a trillion, Anthropic around a trillion, whatever, give or take a couple of 100 billion. Who knows what these things are worth, right?
right.
You saw SpaceX come out at 2 trillion, and that didn't last very long.
Mhm.
So the idea being, you can't really buy long-term protection on the credit of those companies. So what can you buy? You could buy credit on Nvidia, because that's one step down the chain, right? Microsoft's almost all their revenue came from OpenAI. That's kind of scary.
Well,
Um,
almost all their AI revenue came from OpenAI.
Sorry,
It was not
yes,
all of their revenue.
yes. Sorry, thank you. That's what I meant.
Yeah.
Their cloud,
Yeah, I mean,
their cloud.
yeah, it is a different. They have a different animal. Yeah, their cloud revenue. There is definitely some. That's where the whole circular financing, all this, that, all the tinfoil hat stuff starts to come into play. But if you are a tinfoil hat believer that offshore credit, hidden offshore credit, that circular financing, this is all one big Ponzi scheme in terms of I sell to you, you sell to me, and everybody makes money. Uh, this lending facility is just you just went out and ran to HEB and grabbed yourself another 10 rolls of tinfoil. Let's just put it that way.
Exactly, and on the way up, everything is funny when you're making money, right?
Yeah.
Uh, it's yeah. That's the part of all of this. That's the one thing that really kind of weirds me out. Like I get really weirded out when it's like, oh, well, I'll finance you, you finance me. Let's just make sure we don't fail, right? I mean, that when you start like having allegories to the using the words "too big to fail," dude,
Mm-hmm.
that is oh, look at that crazy bird right in there. Too big to fail. So OpenAI actually is too big to fail, and Anthropic is too big to fail. Like
Yep.
I hate when we got to use those words, because it's not like it's too big to fail so it can't happen. It's like it's too big to fail so it's gonna happen. You know what I mean? Like the market is going to get to the point where that is at some point it's going to be a problem. This is one character of the story. Is that happening tomorrow? No, that is
No.
not happening tomorrow. I feel very confident that's not tomorrow. I don't even think it happens this year. We're still building. They are building, and the
I
momentum
mean,
is
it
going.
definitely won't, because they just set up 500 billion in financing
Yeah,
for,
exactly, exactly,
you know,
exactly.
um, but yeah, I mean, it definitely, the monetization of risk. And folks, you heard Tim say too big to fail OpenAI, too big to fail Anthropic. We had a very long discussion, and we have a pretty good idea of where that ends up. Bad news for you. I'm not telling you today. But we will be telling you here in the next couple of weeks. So be on the lookout for that. But the fact that these are now too big to fail, the credit financing, this is going to be leading to a bigger story that we're going to be telling you in the next couple of weeks. Because as Tim said, there is time here, right? This is not a
Yeah,
trade you need to make
yeah.
today. It's not a
No,
trade you need to make tomorrow, but it's a trade you need to make to kind of slowly build into But there's time to start that build. But we're going to be there when it's.
And my big view on this is, again, it's like a storyline, and so you just keep following the story, you keep watching, you see positions build. This is this is a cycle. This is how all of these things work, and you just track it, and you know the players of the story, and you watch what's going on, so that when new parts of the story get unreleased, you know where to be positioned, and if it ever does come unglued, you know where the bad, all the stuff, all the skeletons are in the closets. It's just like any other trade. It's just how you're just tracking the story.
Yeah. So be ready and start being on the lookout for that, because we're going to be talking about this, because there's going to be a couple of big trades that we're going to want to slowly get into that we're going to all want to do together. And I can't wait for it. So be on the lookout. Tim, you made that bold call in gold last week. And, the people here I wouldn't describe them as gold bugs, but maybe gold. And I do love a good Richard Scarry book, don't we all? But let's call them gold bug appreciators. Let's call them gold bug appreciators.
Yes.
Yeah.
I'm also not really much of a gold fan. I don't own any gold. We go mining up in the, in the old mines up here in Colorado. You go to the old veins that aren't profitable anymore, and you can mine out gold, and you get ore, and it's super fun. But I'm actually not much of a
miner. I'm a miner in Colorado. I'm a 49er. I'm Tim Colby, the 49er.
It is so fun. You bring the kids out. We'll have fun. It's a blast.
We'll go mining.
It's great. Yeah. They give you a pickaxe and everything.
Nice.
Look, I'm not much on gold. But I like to trade, right? And I like to see positions set up. If you can pull the futures up, I like the futures because they don't gap as much. But here's the thing. So the way these things set up is, to me, the big signal here was the fact that there was no movement in gold. It's kind of counterintuitive, but when you have no movement in a product, that is effectively the coiling up of the powder keg of something getting ready to move. And you started the show off by saying, we got a back-to-back inside day. And I jumped. I said, where's a big back-to-back inside day? You show me a back-to-back inside day, and I am getting excited. When you show me no movement, I'm getting excited. Now, usually that's a tell that so that's not technically a back-to-back inside day. So I get real nitpicky because technically back-to-back inside day is a day that is inside of a day that is inside of a day. Yeah. So what's really important about that is that is the market saying, look, I don't really know what's going on, but I am ready to do something. I'm ready to move. Markets want to move. And when you get new news, you get something, that's when you get the move, and you get the biggest moves from no movement. So expansion and contraction. And we had gold contracted for a month. Gold likes to move. It wants to move, and it did not move for a month. And it had spent the whole year being hated. Everybody hated gold. Last year, to 2025, they loved gold. Everybody had to buy gold. It was up 60% on the year. I mean, it was the greatest performing asset on planet Earth. It was awesome. And then in January, February, blow off top. Pull the chart back. Everybody remembers, right? Gold.
Oh, yeah.
Whoosh. One of the first things I wrote about was, I think that this is going to pause. And so I put a butterfly on, and it just paused for a little bit, right? And then the war came out, and it was like, we got a war, got to get out of the butterfly because gold's going to move. Well, guess what? It went down on the war. Gold usually goes up on a war, but it went down because people were still really long it. And it basically just became a risk asset. People wanted to sell it as a risk asset. So it kind of became hated. And then it got down, and it got back down to around 4,000 in the futures, in and around a point that was a line in the sand. And it started to draw that line, and it was holding, and it was holding, and it was holding. And they had the big narrative shift into the dollar index, into the dollar being really strong. You could look at any of the currencies, right? So you could look at the British pound, you could look at the dollar Canada, you could look at Kiwi, Aussie, the euro. The dollar became the biggest position of CTAs of all their positions, bigger than any equity long, bigger than anything else. They were long the dollar. And so when that happens, when the market gets really one-sided, that's when I start to get really interested.
Get excited. Yeah.
I get excited. Same thing with the back-to-back inside day. You got a market that's really, really long something, and then you start to get really quiet. Oh, that's really exciting because you have an opportunity for those positions to have to come down. Now, I don't like to be a Schadenfreude where I want to see people lose, but I know that, when you got to run for the exits and you're all one-sided, it's going to be fast. So now the market wasn't short gold. They just weren't long. And in a time when you had a narrative shift, the yen came in, right? So the yen intervention, that normally is very bullish for gold, and gold didn't move. Like, what is that? And you had a dovish surprise out of the Fed, and gold didn't really move. Like, why? What's happening? Like, why is gold not rallying? Gold's not rallying because it was just murdering people for the last 3 months.
Yeah.
And so you had a platinum breakout, and platinum started to go, and that was sort of, all right, come on. I sent you a life raft. I sent you a boat. I sent you a helicopter. Come on, come on.
Yeah.
I gave you all the warning signs, and the market's like, look, we don't own gold. We should own some gold.
There you go.
And that's kind of the out. So the setups like that, they come. They don't come every day. They don't come every week. But when they come, I'll be a little better about, hey, this is a big one on the radar. I'm sending you a life raft. I'm sending you a helicopter. Let's get on.
You send everyone a trade. That's all. That's about as best as you can do in terms of life rafts. And great work. And again, everybody's happy and thanks you for it. All right. So Tim, we're running up against it. And I want to just really briefly talk CPI that's tomorrow. We're looking for a headline of 3.54 and a core at 2.5. Which would be, and they're looking for the lowest levels in some time.
Yes.
And you're not seeing a lot of money stepping in to worry about this risk. The at the money straddle expiring tomorrow afternoon is $46.
No, they're looking past it, dude. The core 5-year low in core September rate hike odds 50-50. What?
Yeah.
50-50 rate hike odds on a 5-year low. Like, it should be a very, very low percentage chance of a hike. It shouldn't be. But so the market is trading the crude risk. They're trading the risk of Warsh. They don't really know kind of what he's all about. I mean, I think the market has him wrong. I think he will raise rates if he feels the need to. I think he will lower rates if he feels the need to. I think he's been on the tape and he has said what he's going to do. I so far he hasn't given you a reason not to believe that. So I like Kevin Warsh. I think he's sharp. I think he's on it, and I think he's paying attention. He's looking at things how you should look at things. He's a market guy. Like he's not a stooge. I like him.
All right, there you go. So 46. So that would mean the XSP straddle is $4.60. The SPY straddle is going to be give or take $4.60. Are you a buyer of that or are you a seller of that?
I think it's a no trade. I'd really, like I said, I thought the equities would chop around this week, and so far all we've done, I'd look at the S&P would just chop. I mean, you haven't even got a chance to sell it, to sell a rip or buy a dip. Doing the butterfly would have been the best trade. Just put it on ahead of time. But like you got core, for CPI tomorrow, you got the headline at 3.4 expectations and the core 2.5. That's all energy, and the reality is the Fed can't drill oil, right? The only thing they can do is raise rates to make you stop buying gasoline. And I think Warsh doesn't want to do that. Like, that's kind of like, this is supposed to be transitory.
The market's kind of doing it for him. The 10 years, 4.7.
Yeah.
Right.
So the idea is that, like, this is supply shock. It's not something that, he doesn't want to make a policy mistake by trying to raise rates into what should be a temporary, sort of transitory issue. Obviously, 5 months into a 3-week operation in Iran is, stretching the definition of transitory, but still, it is supply driven, and you can see through it. You can tell the story as to how this should go away. And so I think him being patient, I think, is not the wrong move. I think it's actually the right move. We had anyway. That's my take. And I don't think the CPI number. I think we'll get some movement, but I don't think it's. I think the market's going to look at the 10-year. It's going to look at the reaction there. If we get a weaker number, we'll have a bigger rally out of the 2s, out of the 5s, that short end of the curve. And that could get our next level higher, right? And so you're going to have IWM, I think, outperforms.
I like IWM, but I'm looking at what I was writing about this last night. The Friday expiration straddle, the one not the Friday PM expiration straddle, is $115. That's got the rest of today, all the rest of the week, and all of next week. That
pick 'em. I think it's a pick 'em.
Well, statistically, 9-day straddles are underpriced.
Okay.
Right now in the market, I'm happy to explain that to you offline, but it's a function of all this 0 and 1 day. Market makers are actually like front running the vol in the near dated stuff and have been underpricing. Because I was talking to Noel about this at a couple of things. They're underpricing options that are 3 to 9 days because they know when it gets to 2 days to expiration and under, they're going to be like force fed. It's going to be like the scene where Homer goes to hell and the devil starts shoving donuts down his throat, and he's going, hump more, hump more. And that is what the market makers have to deal with in terms of the amount of people selling them premium. Something worth looking at, and what scene I'm talking about too. It was funny. All right,
what I also know about being force fed options, right? I mean, when they just jam them down your throat, you're like, oh god, I can't buy anymore.
Yes. So I do think that that's an interesting trade.
Okay.
What is going to be even more interesting is tomorrow at 4:15. Because tomorrow at 4:15, Leash and I are going to be live. We're going to be looking at, 0 DTE, 1 DTE, what's happened in the last week, what's happened in the last couple of weeks, what do we see going ahead? And this type of market is amazing for 0 DTE and 1 DTE because less movement makes easier trades, lower vol, cheaper spreads, closer to the money. It is a great time for 0 and 1 DTE trading. Partly for exactly what Tim and I were talking about. They're shoving these options down our throats. So if you're willing to put on a little buy position, either 0 or 1D, there is huge edge in that. And Leash and I are going to be talking a little bit more about that. If you've not registered to join us right here, 4:15 tomorrow, join me and Leisha. It's going to be fun. We're going to have a good time. At some point during the discussion, she will indeed call me a dork. It's going to be lots of fun and you're going to learn a couple things. So if you haven't registered, come check that out. 4:15. All right. We are up against it. We ran long, but that's all right. So Tim, thank you very much for your time and your insight. Really enjoyed, I always enjoy our conversations. So for Tim Colby, OptionPit's head of macro analysis, and macro trading, I am Mark Sebastian. I am your only option. I'll be back here tomorrow at 10 a.m. as I always am. I look forward to seeing you guys. So for Tim Colby, thank you so much for being here. I'm Mark Sebastian. I am your only option. Thanks again. And as always, thank you, Amin. Thanks, Amin.
Thanks, Amin.